Hello, hello. Good morning, good afternoon, good evening, wherever you are joining us from. How are you doing today? Hope you are well. I'll give it a minute or two before we get started. If you can hear me okay, you can see me all right, put it into the chat, let me know. Hey, Ferda, how are you doing? Just trying to sort this out. Hope you're well, Ferda. Today we're here with Vantage on the Trade Management 101, part 2 of it, the break-even, partial profits, and the idea invalidation. Give me a moment. I'm just trying to sort something out on this, which doesn't seem to be working too well. See if everyone else receive any problems with this before we get started. Just give me a moment. I'm sorting something out. Hope you're well. If you've been trading well, I had a couple of nice trades today. Hope you managed to get into some good trades today as well. All right, got this going. Super. I'll give it a minute more and we'll get started. Today we're here with Vantage on the Trade Management 101, part 2 of it, the break-even, the partial profits, and the idea invalidation. How do I take partial profits on MetaTrader? You can close a trade. You can actually close part of the trade. Let me see if I have MetaTrader on this. Just try that out. No. Oops. You can actually, when you're trying to close a trade, you can actually close out. You can choose the size of the trade that you want to close out further. Hey, Trung, how you doing? Alrighty. Good stuff. Good to hear, Trung. Alrighty, let's get started. So welcome again. All right, thanks for turning up nice and early. Today we're here with Vantage on the Trade Management 101, part 2 of it, which is the break-even, partial profits, and the idea invalidation. Okay, again, you guys know the drill. If you do have any questions at any point in time, trading related questions with what I'm sharing with you, please feel free to put it into the chat. Let me know. I'll be happy to address your questions as they come up. With that said, as usual, before we get started with any webinar, a quick disclaimer. The information, context, opinions, which are expressed in the presentation And the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right, so what it means is that I will be sharing with you some ideas, some thoughts on how you could be looking to jump into or managing your trades. If you do jump into any trades, please make sure you do your due diligence before you before you deploy this method and this strategy. Okay. So with that, let me see. There was a question somewhere that just popped up. All right. Okay. No. Okay. Let me just change this. Just get rid of that. I can't get rid of this. Okay. There you go. All right. So quite a number of things to get through today in terms of the topics, right? With the topic today. First part, I'm going to just do a quick refresher in terms of the anatomy of a trade, right? Anatomy of a trade. I'll like the early question from further, partial profits, right? How do you do a partial profit? Where do you even start considering closing out partial profits? When do you break even? Right? When do you start thinking about moving your trade towards a break even level? The idea invalidation. When do you start thinking that your trade might be, your analysis might be wrong and you just want to get out of the trade as quickly as you can, right? And then how do you apply all of them into trading? What I actually have done is I've put all the topics into charts as well. So as we go through, instead of going through it in the last point, we might forget part of it by the time we get to the last point. I'll be showing it to you as we go through it. So the top for every topic, we'll just be looking into some chart examples as well. All right. So as usual, if you do have any questions, please feel free to put it into the chat. Let me know. A quick introduction of the team here. My name is Jin Dao. All right. Most of you know me as Jin. I'm one of the prop traders here. I'll be happy. I've been trading for many, many years now, and I'll be happy to share with you my thoughts, ideas, views of not just the market, but in terms of how to manage your trade properly, how to do how to jump onto this trading or stay in this trading journey for as long as possible, okay, and as profitably as possible as well. Okay. We'll have a question there. Nope, someone's typing something but it didn't come up. Okay. So as usual, right, first part, anatomy of a trade. Okay, let me just do this, take that up. Okay. So the anatomy of a trade, what it really means and what most traders consider when they look at anatomy of a trade is an entry, the stop loss, and a take profit. Right? Most new traders, when they start trading, that's all they think about. Where can I get into a trade? Where can I buy? Or where can I sell? Okay. Before we move any further forward, it's not always just thinking about where to buy or where to sell. There's also the thought of waiting, right? It's not ready to buy or not ready to sell. So you end up sitting there waiting for a trade, right? But when you're thinking about buying or selling, for buying, obviously, you're looking for price to head towards upside. If you're looking to sell, you're looking for price to drop. If you're waiting, right, most new traders only consider buy or sell. A little bit more advanced would say, no, wait, we need to consider about waiting as well. But a lot of times traders don't think about what they're waiting for. They just go, oh, wait, it's not ready to enter a trade. I'm just going to sit out. I'm just going to sit there and wait for price to move. You don't want to do that alone. You want to consider, when I'm waiting to buy or I'm waiting to sell. Right? When you start considering about waiting to buy or waiting to sell, then you actually have levels that you'll be considering. So in this case, for example, when you're looking to buy, then you'd say, okay, it needs to, for example, break above a resistance level before I'll look to buy, or it needs to bounce off a support level before I'm looking to buy. Okay, so you're looking for something to happen, a trigger to happen before you get into a trade. So it's not just waiting, you're waiting for a particular action before you get into a trade. Similar for sell is if it bounces off a resistance level or breaks through a support, then you're looking for to sell. Okay, there are many other reasons why you'll be looking to sell. For example, a news event, your price action, or your indicators, or Fibonacci levels, or price reacting to those levels, just giving you that indication whether to get into a trade or not. Okay, so it's not just buy or sell, it's buy, sell, or wait to buy or wait to sell. And textbook, right? Everyone pays so much attention to the entry price, to where to get into a trade. It's almost forgotten at times to consider your risk in terms of your stop loss and your take profit level, right? So what we want to do as well, stop loss is not just placing it at a point where that's the most amount of pain you can sustain. Okay, you don't want to put a stop loss based on pain levels. You want to put a stop loss based on where your idea would be wrong. So like for me, for example, whenever my trade hits a stop loss level, I'll be happy. I'll be happy that it hits a stop loss level because I know that it's going to continue on, right? What I mean by that is if, for example, I'm buying, right, anticipating that price should go towards the upside, my stop loss will be below. If it does come down and hit my stop loss, so that's stop loss here. If it does come down and hit my stop loss, I know most often it's not going to come down and then bounce back up again, right? Most often, if it comes down and hits my stop loss, it's going to drop quite significantly because that stop loss level is where my analysis will be wrong, right? Wrong in terms of it's not going to go up, it's going to go down. So it triggers the stop loss to hit down quite strongly. Okay, so you're going to consider your stop loss level and then your take profit. Okay, take profit is where you think price will head towards, if you were buying, towards the next level. Okay, so a lot of times most traders consider only the entry, the stop loss, and the take profit, right? Super new traders would even probably forget about stop loss and take profit, thinking that they could manage the trade as it's happening, as it's running. So they enter a trade with no stop loss and no take profit. I can almost guarantee you that's going to be the surefire way to be losing a lot of money. Okay, so always make sure every trade, as you enter the trade, immediately apply that stop loss, especially the stop loss level and the take profit, because you never know when a sudden news could cause price to spike crazily towards upside or towards the downside. So those 3 points, the basic level of anatomy of a trade. What we are here to guide you through as well is, the break-even levels, right? When to move your trade towards break-even. Okay, so you normally, when it's running in profit already, when it's already in profit, and you want to just secure that trade, make sure you're not going to lose money in the worst case scenario, you move it to break even. Partial profits, when you're going to take out some profits from that trade as it's running, just so that you can secure the profits, secure capital, right? Manage your risk, and then let the trade run on to see how much you can maximize it by. Trailing stop, right? In the case where you might not want to close out partial profits, you might want to hold on to the trade and let it run. Your stop loss can be moved up. If you're buying, can be moved up according to price as it moves up, so that you have a trailing stop, an automatic trailing stop. Or if it continues moving up, you could move your trailing stop based on indicator levels, support resistance levels, key levels, right? Or channels and Fibonacci levels, right? So Trailing stop is also there as a automatic or a manual process that helps you secure profits as well, secure your trade, and especially in terms of the profit. All right. Hey, Elias, how are you doing? And then lastly, idea invalidation, right? When you have entered a trade, right, it's come down against you. So for example, again, back to that example where you're buying and then at that point, and then it starts dropping, you have your take profit, you have your stop loss down below. You might think, wait, it's going against you right now. So that's your stop loss. That's your take profit, right? It's going against you right now, where you might be considering, okay, this idea is wrong, but let's see how we can rescue it. You might move your take profit down towards that break even level and idea invalidation level. As price goes down, you're looking for that quick spike up to stop you out, to close out at take profit, and then maybe come back down again, right? So this is slightly more, this 1, 2, 3, and 4 points are slightly more advanced in terms of how to manage your trade a little bit more closely. You haven't missed a lot. We almost kind of just started, Elias. So you're still in good time. Don't worry. All right. So those 1, 2, 3, 4 points, slightly more advanced method of managing your trade, not just an entry, stop loss, and take profit. Ways to manage it as it's running, right? As it's running, you're considering, is your analysis right? What to do to secure profits? If your analysis is wrong, what to do to try and get out of the trade quickly. Okay. So again, a quick recap, as I was just drawing for you, your stop loss levels and take profit levels. Remember, I think that most traders, well, actually all traders, will always be trading with a support, right? Support level or major support level here, and a resistance level to the top. Okay. So you always want to remember that your stop loss is beyond the level and your take profit is before. Very simple tagline to remember, right? So stop loss is beyond. I'm trying to write with a mouse, so it's terrible, right? And take profit is before. Okay, so just remember that. Why so? Why so? Because, when you have a stop loss beyond the resistance, right, or beyond that support, so your stop loss can be here as well, right? Your take profit can be here if you're looking to buy it up. So you're anticipating that price is moving up, you went to buy, your stop loss will be below the support or beyond the support. Your take profit will be before the resistance. If you're looking to sell at that point, then your stop loss will be beyond the resistance and before the support. Why so? Is because the resistance and support level provides another barrier, right? Another level of protection for price. So quite often we'll see that, price comes up, hits that resistance level, and then bounces back down again, comes down, bounces back up, hits the resistance, bounces down, hits the resistance, and bounces down. Okay, so you want your stop loss beyond the resistance in this case, because you know that if price does come up, right? It does come up. Let me just remove that for now. Take those away. Okay, so if you see, for example, if price does come up and it breaks above your resistance level, okay, and it hits your stop loss, this resistance level is gone from a resistance, it's changed to become a support level. All right, so it's no longer a resistance, it's a support level now. It's forming another level of protection for price before price can come lower. So in this case, this is why whenever it hits my stop loss, I'm quite happy because I know that it's broken a strong resistance. You can always anticipate that price is going to move strongly towards the upside. Okay, so that's why we have our stop loss beyond the resistance level. Why do we have our take profit before the support level? Is because we anticipate, you don't want your take profit below that because it's going to hit and bounce, right? It's very likely to hit and bounce like what we've seen over here. Okay, so if you have your take profit below or beyond your support level, your resistance level, then it's going to be very hard for price to hit that level. It's going to be very hard for price to hit that level, which is why you're going to see price come down, almost hit your take profit, fail to hit because of a support level, and then bounce back up. Okay, so because of that, what we want to see is, or what we prefer is for what we have there. Okay, let me just clear everything out. All right, so you can see what we're looking for is for price or stop loss to be beyond that resistance level and take profit to be before that support level. All right, so in this case, again, stop loss hard to hit, take profit easy to hit because it's kept within those support and resistance levels. Make sense so far? Hi, Chair Chan. How are you doing? Hope you're all well. All right. So with that, now we start considering the partial profit placement. Partial profit placement. What that means is that, let's see, right? At this point, so don't worry about the one yet. You're looking at point number 1 here, right? The entry. The entry level, you buy entry on a breakout, hoping for price to push to our take profit. Okay, so you at that point, you're looking to buy because you got a bit of a resistance level here. You got a bit of a resistance level there. All right. You're looking for this to break up towards the upside for it to push higher. Okay. Then what happens is that you had your stop loss below this point. You're going to take profit here. Okay. So I'll move this to take up this as take profit. And then I'll have this as your stop loss there. Okay. And then you see price go up, hit, go up, come back down, goes back up, test, and then you realize, oh, I actually have a resistance level that you might have missed out on, right? So you're looking at price going, hitting that level, turning back down, and then possibly trying to break, hitting that level. At that point, we always anticipate that a resistance level is going to hold, right? We don't project or try and predict that a resistance level is going to break through. Okay, so you see there, it's hit a resistance level. Just thinking, maybe analysis might be wrong, right? Might be wrong. You're going to start thinking about getting out of that trade. Okay, so you start moving your stop loss towards the upside. You could be, because this is partial profit placement, you got in there, you could have closed out some of that trade in the middle, right? You could have closed out part of the trade in the middle as it's moving in your favor, right? Some profits there. And then you could have closed out a bit there as it tries to break. So you could still have some, a small amount of the trade left running, right? If you entered, say, for example, a 0.1 lot, right? You could have closed out half of the trade or 3/4 of the trade, leaving a little bit to test whether it's going to break towards the upside. And then as price moves up, you move your stop loss higher, right? You move your stop loss higher, thinking that you're trying to break towards the upside. You could move your take profit as well, a bit lower. And then that's where you modify your stop loss. Worst case scenario, it comes back down and closes you out. All right. Does it make sense so far? Okay, so again, let me come back to this. I need some space. Okay, so you can have, for example, in the case of when you're buying, just on the side here, doing a bit of a scribble, right? If you're buying, oops. If you're buying, okay, and then as price goes up, okay, your resistance level is there. If you say, for example, you were anticipating for price to continue trading higher, you would first either consider moving your stop loss up, right, as you try and secure the profits, or you could be looking to close out part of the trade, right? Close out part of the trade or partial profit placements, right? At the level where it comes close to your resistance level, you might be looking to close out part of the trade, anticipating leaving a small amount behind that price could break towards the upside, right? So what you could then also do is move your stop loss towards the break even level. So in this case, you would have closed out about, say, 75% of your trade, leaving 25% at risk to try and look for that breakout potential. If it doesn't, then it could come back down and hit your stop loss, which you have moved up at break even. Okay, so this is how we try and maximize a potential trade, a potential running trade, right? As you see that, it goes up, you secured some profits, quite a lot of profit there, and then, leave a small amount to try and take advantage of a big move, of a possibly big move towards the upside. In the worst case scenario, because you would have moved your stop loss above or towards that break even level, you better close out your trade at break even. Overall, what you see is that you've got almost no downside. Oh, I see a question there. Hang on. Almost no downside, and also onto good upside potential. Okay. I don't have MT5 or MT4 on this computer. Let me see if I can do a quick download. All right. Give me 1 second. I see a couple of you asking, so let me just try and do a quick download here. Let's see. Give me two quick. I definitely don't have a MT5, so let me see what I can do. Hang on there, Elias. Let me just check. Okay, and also, if I'm going to be entering, if I'm going to be entering a trade to try and do a partial profit, I have to make sure that I get into a trade that actually makes money so that we can do a partial profit. So just give me a second there, right? I'll show it to you on a MT4. It's going to be quite similar because I just can't download all of it at the same time right now, but I'll show it to you on MT4 and then we can take it from there. Has it downloaded? Just check. All right. Let me just move this to the side for now. Two seconds, get this started up. All right. Take that away for now. Okay, just get this going. Oh, there it is. Sorry, this was a bit of a last moment thing where I'm trying to install and show you how to trade. Let me see if I can get it done as quickly as possible. Alrighty. Okay, so I'll show you here that I'll just try and enter a quick example of a trade. Let's try. This is demo account, so I'm happy to just bung in the trade for now. Let's sell the euro dollar towards the downside. Open that out. Okay, I have my stop loss, say about there. I just want to use this as an example to show you guys in terms of getting in on the trade. And then take profit down there. Okay, so let it run for now, just so that I can show you how to close out a bit of the trade, a partial close of the trade. I could also show you a partial close of a losing trade as well, so I'll show you that later on. Okay, let's leave this to run for now, get through the slides, and we'll come back to this. So in terms of the break even, okay, so back to the points here. The break even is a point at which your trade neither makes or loses money, right? It's a price at which you have entered the trading position and the level at which the risk on the trade is recovered, right? Very similar or same example as the one we had in terms of the partial profit placements, right? So you can see that we would have entered. Where's my mouse again? There we go. Right, you will see that you would have entered at that point. Oops. You have entered there to, let me just show you, this would be better. Right, so we're looking for this to come down, bounce, and then turn down. So at this point here, we're possibly looking for a possible entry level. All right, so we're expecting price to come down, hit this level, bounce towards the take profit on the upside. Okay, for it to come down, hit, and bounce towards the upside. What happens there is that, okay, as we draw that, you see that there are interim levels at this point, right? I'll do a bit of a cleaner chart. You can see that price has come down, tested, and tested. So this whole area here becomes a bit of a, what I like to call it as a hesitation area, right? A hesitation area, because if price does turn up, it could bounce around here a little bit before trading up towards a take profit level. Okay, so when there's a hesitation level, what you would also want to consider is if price is going to bounce around that level, you could consider it as a partial profit level. Okay, a place where you might want to close the trade or close part of the trade, secure some profits, because you never know whether it's going to bounce around at that level before shooting up or bounce around that level before turning back down again. Okay, so it's quite important there to have that partial profit level identified. I call it a hesitation level. So you can see in this case, price bounces back up, hits that hesitation level or the partial profit level, where you could be closing out part of the trade before it turns back down. Okay, so you not just close out partial profits, you would also move your stop loss up. Okay, you can see here, your stop loss at this point moves up towards entry. So you close out part of the trade, right? You close out part of the trade to secure your profits, to secure, to secure most of your profits and then give it a chance to see whether price is going to continue up towards a take profit. And also you want to secure your downside, so you move your stop loss up. You move your stop loss up towards the entry level, right? As it goes up towards entry, you see the next move, it comes down, hits your stop loss at entry or break even level. That's where you would have been happy to close out your trade, right? So you'd be happy to close out your trade. Then it makes a lot of sense in terms of if price doesn't turn down, if price doesn't turn down and actually continues towards the upside, you would have maximized on about 25% of the trade, right? And or worst case, it comes down, you have made money on that first move and then took a risk on a little bit for it to break even again. Makes sense so far? Let me just do a quick check of the charts so that we can see what happens. Okay. Not a perfect example at this point, right? Not a perfect example of just something that we've, thank you, Elias. Right? Not a perfect example at this point, just something I wanted to quickly jump in and show you. Right, so this is the euro dollar on the H1 time frame. We entered a sell, stop loss up there, take profit down here. There were questions about how do you close out for partial profit, right? How do you close out for partial profit? What you could do is, right, so this is one standard lot. You could just go in here and change it to, let's say, a 0.25, right? So 0.25, so you would have closed out a 0.25, which leaves, in this case, 0.75 of your trade to try and continue towards the downside. So we'd have secured, going to the history, you'd have secured that $3.75. Again, purely as an example, right? It's not a great time to be securing profits or trying to close out partial profits at this point. But that's how you would close out your trade or part of your trade as it moves. All right. Further, does that make sense? And also, Elias, was that your questions about closing out partial level, partial profits? Fantastic. No worries. All right. Just remember that if you're going to, change the number first, right? Just remember to change the number first, because if you did just press that and close, it would close out the whole trade. If you change the number and you press either buy or sell, then you would have entered another trade. Okay. So you can always apply, go for another 0.25 and then close out another part of it again. All right. In this case, now we have a 0.5 or 5 mini lot left running because we've closed out 2 0.25 trades. Okay. One more thing is, yep, that's it. Okay. Coming back to the slides. You're most welcome there. Okay. So that's how, I'm sure you guys know how to move your stop loss and take profit, right? So you can, if price is moving towards the downside, you could move your stop loss nearer, or move it towards break even, like the example I was showing you just then. Take profit as well. You can be just dragging it as it goes. Okay. So that's how we move our stop loss up originally. From that point upwards towards the entry level, you can be doing the same thing there. All right. Makes sense. All good. Let me see. No questions. No further questions. All righty. Good. So the next thing to consider is idea invalidation, right? What's an idea invalidation? Idea invalidation is usually placed before your stop loss, right? Before your stop loss, it's the level where you basically think, hey, analysis is wrong or very close to being wrong. How do I try and get out of this trade in the best possible situation? So when this level is reached, your take profit is moved to your entry, right? Take profit is moved to the entry, giving you a small chance to get out at break even, right? This doesn't always work out. I'm going to put a big disclaimer there. This doesn't always work out, but it's, either going to come down and hit your take profit at break even, or in the worst case, it's going to break through from that resistance and then continue on to your stop loss level. It's really trying to make the best out of a worst case scenario. Okay, so how we have it here, again, you have your entry level. Where's my mouse? Okay, you got your entry level here, right? Anticipating that price is going to push up and then turn down, right? So you're looking for this to turn down because of that resistance level there, right? So as price turns down, you got your take profit towards the downside there just before that near-term support level. And the next thing you see is it bounces back up. All right, it bounces back up, breaks above your near-term resistance level, and it comes very close to your stop loss as being protected by that next resistance level. Okay, so you can see that price goes up, hits that resistance. Thank God for resistance levels, because it hits and then it turns back down. So once it hits that level, you start thinking, all right, if this hits a resistance, could it hit and turn back down a little bit, right? Because then I can try and get out of a trade before it continues back up again. So you move your take profit level, your original take profit, towards upside, towards that break-even level, towards where you would have got into that trade, right? And what you might see is that price comes down, hits your take profit at break-even, right? That's what we call an idea invalidation. And then before it goes up, and then could have hit your stop loss if you didn't try to close out that trade at break-even. All right. From my experience, that works very well sometimes. Other times you might see that, as it comes towards your idea invalidation level, you would have moved your take profit up. It could continue up and hit your stop loss without testing lower, or it could come down a little bit lower before going back up again, So that's why I'm saying that this is just trying to make the best out of a worst case scenario. In the best case scenario, in a best possible outcome in that situation, you would have hit a break even before it goes up. All right, how it looks like in terms of an example, right? Again, we can see that at this point it's moving towards upside, turning back down, coming close to that support level. In this case, we're looking for an entry, expecting it to push towards the upside, right? Expecting it to hit that support level or bounce off that support area to push towards that 7360 level. Okay. And then what we have here, as you do your Fibonacci, so it depends on how you want to how you do your analysis. It could be Fibonacci levels to identify a stop loss level or support resistance levels. You could have I'm terrible at drawing a straight line in this case, right? You could have a bit of a support level there, or you could have a fib level to identify your stop loss to be lower. Okay, so you could have a stop loss at the bottom there, but your Fibonacci expansion levels would be just before that stop loss. Okay, there's a question here. I've done idea invalidation before. I didn't know what it was called. Sometimes I'm lucky. Sometimes the trade runs away to the stop loss, but doesn't this play in the emotions and psychology of the trader? All right, it does, right? It does play into so it really depends on what style of trading you do. I do know that some swing traders, position traders, would set stop loss, take profits, and let it run. Either it hits a stop loss or take profit, whatever it is, they will take on the result. Some short term, more intraday, maybe a bit of a scalping scenario, then you'll be watching the charts, just trying to protect the trade. that kind of scenario. Okay. Why it's not entirely a bad thing in terms of idea invalidation is because if I just move the chart on a little bit, you can see that's the idea invalidation. You will see that price has come down and tested this. Oops. You'd see that price has come down and tested this level already, right? So it's come very close to that point where it says that your analysis is wrong. You're not you're not doing an idea invalidation just based on how price is moving, right? You're not doing that just based on a feeling that, oh, it looks like I might be wrong. It's come very close to your stop loss, right? It's come very close to your stop loss. And then you're just thinking, okay, now that it's come very close, it could be a sneeze away, a smidge away from hitting your stop loss. Worst case scenario, it does drop that little bit more. You can see it's 7065 and 7049. So it's about 15 pips away, not very far. At that point, it's hit your idea invalidation. Then you would say, okay, let's try to make the best out of this bad scenario. Your take profit will be dragged down towards the entry point. All right. Okay. Drags down to your entry point. And then you see the next moment, it comes back up, hits, gets you out at break even before dropping back down again. Because remember, why this, you can see that this was a bit of a gamble, right? A bit of a higher risk trade is because we identified, this level, anticipating that bounce or seeing that bounce up. We again identified this level, anticipating that bounce up, similar to what happened. But remember, what's the trend? Right? The overall trend was towards the downside, right? So this would be looking for a little bit of a higher risk trade. And also another reason for this idea invalidation level is understanding that price never moves in a straight line, right? It moves in that zigzag formation. And it's why we actually see that zigzag formation, right? So that's why, let me just clear it out. It's super messy now, right? So that's why we see that as it comes down to test an idea invalidation level or to reach an idea invalidation level, we're looking a bit of a hope, looking for that zigzag, looking for price to zigzag, moving take profit down towards break even so that it could touch and then turn back down again. Does that answer your question there, Elias? Fantastic. Good stuff. All right. So it's not always that you get to the situation where you're able to have an idea invalidation setup, because like you mentioned as well, price could just come down, test this level, bounce a little bit before straight back down to a stop loss, or it could just next candle go straight back down again. So it's worth a chance, but it shouldn't be something that you hope for, right? Obviously, we would rather hope to enter a trade and see it move up as we expected. And then also have an idea invalidation level, right? Just before the stop loss. Is not a feeling kind of thing. You don't want to be in a trade and then, right in the middle, slight loss, and then you move it to idea to break even because of idea invalidation. What's going to happen is you're going to end up losing a lot of trades, because those that you could make price fluctuating before moving higher, you end up getting out at break even. And then those that you actually lose goes down to stop loss. It's a bad run to get into. All right. Makes sense so far? Okay. So what I want to do is I want to jump into that chart again. Okay, great. So as it's coming down, right, we can see based on the example here, now price is coming towards the downside, the break-even trade. You could be moving your, okay, this is again a terrible example, because we've only just entered the trade. It's barely moving. You know, you could just move your stop loss down towards break even or slightly into break even just to secure that profits. Okay. Or what you could be doing, let me try and find a trade where we'll be losing. Okay, let me just do 1 second on this. Let's say that we were looking for this to move up, right? And as it's dropping, okay, your stop loss could be, again, as just a simple rough example, you know, support level there because of those points, stop loss below that, right? So your idea invalidation could even be, all right, hang on, take profit, let's say up there. Your idea invalidation level could even be at that 1.1981 level. If price does drop towards this point, or if price does drop towards that 1.1981, then you move your take profit down towards the break even level, right? Just so that, you know, if it comes down, taps this level and pushes up, then you close out the trade. So is it harder to manage a lot more trades when dynamically moving stop loss for each one? It is. It is a lot harder to manage a lot of trades because you need to juggle between all the different trades. In fact, I would say that for most traders, you know, one or two good trades at a time would be the max that you should be considering. If you do have, you know, a lot of trades open at one time, then it might not be the best case scenario. It might not be something that you're going to be looking into. Okay. So you can see here it's come down, for example, tap that level. We move our take profit down towards break even, right? Trying to see whether this is going to bounce back up for an idea invalidation. Again, I can tell you that this is a terrible example. Just something that I wanted to quickly jump into just to show you. It might work out quite well. See now, so you see it come down, tap that level, bouncing back up a little bit. Wow, this is turning out to be a really good example then. Right, so if price goes up and it closes out at break even, let's see if that's going to happen in the next couple of minutes. So Chung, I hope I answered a question there about, you know, super hard to manage a lot more trades when dynamically moving stop loss for each one. You could just, you know, try not to have too many trades. Okay, so you can see here now price coming back up, possibly going towards the break-even level as a bit of an idea invalidation as we're expecting price, we enter a trade hoping for price to go up, but it's come down, hit that level, and then looking like it's going to, could come down, hit stop loss, but then we move our take profit down towards the entry level for a bit of a break even or an idea invalidation level. Any further questions at this point as we see if price is going to bounce up to hit our break even level? If you got no further questions, is this going to be, would ID invalidation and, you know, partial profits be something that you start deploying into your overall trading strategies? You're most welcome. Great. Thanks for that, Elias. If you had a good session, you know, put it into chat, let me know. If any feedback, I'll be happy to address that as well. I saw nowadays there are a lot of trade ideas and essays on almost all forex, but I think maybe max 3 is a lot. Yeah, max 3 is a lot. 2 to 3, 2 is perfect. 3 is bordering on too many already. Okay, so you can see here pound dollar tracking up, almost hitting that level. I would love for it to hit up just so that it can show our example, but it looks like it's going to come back down and hit that level. Alrighty. So with that said, please make sure that you trade well, trade safe. There are a couple, is this bouncing back up? There are a couple of big news events due this week, especially with the non-farm payroll on Friday this week. Expect some volatility to come around. There you go. Bit of an idea invalidation, right? But not a perfect idea invalidation example, but it's come down, hit a level, bounced back up, closed at break even before possibly turning back down again to where the stop loss might be. Okay, so I'm super glad to have been able to share with you that example. What I've been doing, I opened 2 trades of different sizes, the bigger one than the other. So I closed the biggest lot first, then let the other trail. You could, now with this way of closing out partial, you could just enter one trade and then close out partial lot sizes as you go along. All right. With that said, trade well, trade safe, and I'll kind of enter the session for today. And remember, big news up ahead for this week. Take care now. Bye-bye. See y'all.